Okay, good afternoon. Welcome to the weekly take on the market. Today is Friday, March 14th. It is just after 1 p.m. Pacific Standard Time. Market just closed. I'll be your host. My name is Scott St. Clair, manager of the Premium Product Group here at Investors Business Daily. All right, take a moment to read the disclaimer. I'm not licensed. I can't tell you what to buy, what to sell, what to hold. This is for educational and entertainment purposes only. All right, so we'll do the same thing, market indices. We'll take a peek at the industry groups. I don't imagine there's going to be much of a signal the way the market's been. Then we'll do a bunch of stocks, and then we'll do the quote of the week. So sentiment, sentiment is a secondary indicator. It's not a primary indicator. So you probably don't want to trade off of it. In fact, if you did trade off of it, you'd have probably got long a little too soon, because this has been plummeting the last handful of days to weeks. But we've got this crossover where there are more bears than bulls. And historically, this is usually a very good signal that the meat of the sell-off is over, at least in the short term. And when I say the meat of it, maybe 75% of it, 80% of it. Can it go lower? Of course, anything can happen in the markets, which is why we don't trade off of these indicators. But sentiment is very, very skewed to the downside. I saw put volume is very high, like the highest ever, if you believe some of these charts. AAII, which I'll show later, is very negative as well. So there's a lot of people on one side of the boat, and what happens is when that happens is the boat tends to tip and go the other way. So today, Friday, we had a pretty good rally. I know it's just one day. It's day one of an attempted rally using the O'Neill methodology, but at least you had day one, right? The way it was going and was uncertain we've ever get day one. The tape was so bad. It was so heavy. Today's the first day that the heaviness of the market was finally lifted, in my humble opinion. Here's the AAII numbers. So 59% bearish. The last time you could see that low in 2008, probably, or 2008, 2009-ish. I don't know exactly when. Maybe my next slide will tell you the exact date. I think I do have that date. But we're the second highest in forever, it seems, or the third highest, or something like that. So they're pretty bearish. So here's the stat. They're now at 59% bears. They've been above 55% for 3 weeks in a row. This has only happened one other time in history, March 4th, 2009. So it's just a one and a one. The N is one, right, in your sample size. But wow, what a one that is. It's so strange to me, though, because the market deserved to be, or how should I put this? It made sense for people to be bearish on March 4th, 2009. Heck, even I was. I thought we're just going to be in this long, drawn out bear market and everything's over. Just go to cash and forget about stock market for years. And that was right near the low. So maybe we can get some kind of relief rally just to try to move the goalposts a little bit on the bearishness. Strategists, their target for the year end, I kind of like this chart. You can see the blue line is the target, and the white line is the S&P, and the target is almost invariably above where the S&P is. That's just what they do. They're never. It'd be very rare for somebody to have a target below where the S&P closed. You just wouldn't want to do that. It's kind of too far off away from the herd, and that's how you can get hurt. But the year-end forecast was wildly bullish coming in, and so far it's not coming to fruition. But it's only March 14th. I guess anything can happen. The hedge fund hotels, or the pod shops, or whatever the name du jour is, the stocks that they've been in have gotten hammered, and we've all seen it, right? Palantir, NVIDIA, et cetera, et cetera. So they've felt the brunt of the selling has been in a lot of those popular stocks. And I saw a stat. I thought it was very interesting. The Norges Bank, the Norwegian central bank, I believe, has 324 million shares of NVIDIA the last reporting period. They're the 10th largest shareholder. The Swiss National Bank, I've talked about them, how they owned a bunch of Apple. They own 90 million shares of NVIDIA. And I just don't know who's the next buyer, right? So if the mutual funds are all tapped out and the hedge funds are all tapped out, and now the central banks are all tapped out on these names, who's the next marginal buyer? There isn't anyone, at least not on this planet. So that's probably why it just takes a little bit of selling pressure to drive these stocks down, because there's just no support for them. They're, hey, your XYZ hedge fund, yeah, I'd love to buy more NVIDIA, but I can't. I got no more room for it. So those names are very overowned, and that's kind of what this market feels like to me. I guess I'll go to that now. Let's go to the market indices. I'm going to turn my camera off so I don't forget to do that for the charts. So here's the NASDAQ. And because yesterday was, you undercut the lows, even if it was barely. Today is day one of an attempted rally. So the S&P, I don't know, did we undercut the lows? I think we did. Yeah, for sure. So then today is day one of an attempted rally. So it feels to me like there's nothing wrong, potentially systemic. And the reason I say that is, like, I watch, this is an ETF called JUNK, JUNK, and it's the high yield bond index. Although it is below the moving averages, like, you could, if we go back to like the 2020, that's COVID, right? I mean, that's a bad break. Like, something's wrong with the system. You go back to the great financial crisis, look at that. That's a really bad break for a junk bond, even a bond ETF. I mean, a bond ETF, a junk bond ETF, it would be down a little bit more, obviously, or maybe even a lot of bit more, but that's a really bad break. So I watch these, just if I see some type of bad break, then maybe there's something wrong in the system, like systemic, if that, for lack of a better word, and then that would get me a little bit more nervous. But so far, they've held up fairly well. Here's HYG. So I just think it's the money is shifting. Like, the US has been so great for so long. It just got so overowned, as referenced by the Norwegian central bank, the Swiss National Bank, and every mutual fund and hedge fund out there. And the money started to come out there, and it needs to find a home, and it was finding a home in other places. I don't know if this is some type of long-term change, possibly it could be, or if it's just a short-term blip, like a shakeout. The way I trade, it doesn't really matter. It's all food for thought. It's all kind of fun and interesting to think about. But, like, the world markets are holding up, pretty well compared to the US market. So, like, let's look like Argentina. This is an ETF, Argentina. I know it's below the 50-day, but that does not look bad at all. That looks like it's setting up. In fact, I almost bought that today. Instead, I bought two Argentinian stocks that I like, but I don't know. That doesn't look too bad to me. How about Poland? I've talked about Poland, and it's very kind of esoteric type ETF, but look at the move it's done. 20 to 28. It's just roaring, acting great. And look at 92 relative strength. I missed it. I kind of fell asleep at the wheel. I bought this somewhere. I feel like there was a double bottom somewhere that I bought this one. Maybe I saw this as some kind of double bottom, and I made a little bit of money. It didn't, I didn't expect to make a ton. It is an ETF, but that's acting really well. Chile is breaking out of a long base here. Why is Market Surge doing that? Stop doing that. Let me turn off the real-time data. That shouldn't matter. That should not happen. Peru, and bear with me. I'm gonna get a cup of coffee. Give me 90 seconds. I'm going to relaunch my charts. This is driving me crazy. Okay, I'm back. Sorry about that. I didn't want to redo the video, and that was painful. So let's get going here. Okay, so Peru. That looks pretty good. Now it's Peru. I mean, I don't know if I'm going to run out and buy Peru, but if I lived in Peru, I'd be pretty bullish on that action. Brazil today had a nice day. I did buy Brazil today. I bought this ETF here. And so like if the market's in correction here, this could be, you could construe this as maybe a pink rally day. If you don't want to do that, that would be day one. Day two, day three, there's blue day. Day four is red, but doesn't undercut the low. That's the rule. Some of you have asked about the follow through day. Don't make it more complicated than it is. It's got to undercut this low before you start over. So this would be 1, 2, 3, 4. This is day 5, day 6, day 7, and this would be like a day 8 follow through day. Volume is higher than the previous day. Now it is an ETF, but that's kind of the concept of how it works. Again, I did buy this, but if I was in Brazil, I would be buying stocks on what seems like for their market a follow through day. Germany came out of the space, acting really well, 13%, 91 RS. And then last but not least, at least, I'm sure there might be others, but China. So China is trying to break out of this cup with handle. If we go to weekly, you're coming out of a long look at this long bear market it's been in. It tried to go there, couldn't, tried to go there, broke down, but didn't lose, came back undercut a little bit, but basically held that. This looks like a base on base, and relative strength of 94, that looks very bullish. I do own this one. Of the ones that I showed, I own Brazil and this one, MCHI. So look around, and there's other markets in Europe that are holding up that I've seen. So very interesting. I don't know what it means, in 3, 6, 9, 12, 18 months. What it means for me now is I've always believed that money will go where it's treated best. And so it's looking for a home, and I don't know if it's found a home in these, but in the short term, it seems like it has. So let's look at the US markets. So the NASDAQ, I don't think I talked much about those. So today is the first, since this sell-off today was really the best day we've had. I know this day is blue and this day is blue, but I'll be honest, today was a good day. We opened higher. We tried to come down just a little bit in the morning. If I go to the 60-minute, let's go to maybe like the 15 or the 30. Yeah, so you gapped up, and then it got hit on the really quote unquote bad consumer confidence numbers. This is how you want markets to act, at least for one day. You had bad news. The consumer confidence numbers were really bad, and the market tried to go down on that news like that, and then came back really fast. That's bullish price action in the face of bad news is how lows are made. I don't know if it's the ultimate low. I don't know if it's a one-day low, but it was the low for the day anyways. And so you had really strong action the rest of the day. The market held, closed right on the highs. So day one, because now look, so this This is your first blue day, so that would be day one. This is your second day, that would be day two. But the low here is 17,238. Let me see here. The low 17,238.24. The low this way. So we held the low. We didn't undercut the low. So we have a bit of a divergence in the U.S. markets. That's if you count this as a pink rally day. So let's just go to the strictest of rules. How to make money in stocks, volume 1. This is your first day, the first blue day, right? Even though you undercut the low of that blue day, you're still in the count because you did not undercut the absolute low. That's all that matters from the strictest beginning of the book, the very first time Bill taught this process. So this is day 2. So today is day 3. So you can't, even if the volume was up 1,000,000% and the market was up 1,000,000%, it can't be a follow through day because you really want that window of day 4 or more. So, but we're in that count for the S&P. Because we undercut the low, this is day 1. So you have a bit of a dichotomy. If we have a really big Monday, you could have a follow through day on the NASDAQ, but not on the S&P. It'd be very unusual. Normally when the counts are off or different, historically, it doesn't really matter. I think in the COVID bull market, you had a NASDAQ follow through day after the S&P or vice versa. Like the count occurred like 1 day later or 2 days later. But in the end, it didn't matter because the market roared up. So you got the signal. So now, if we get a follow through day, what do? Do you run out and load up? No. If you are uninvested, if you're in cash, I think you want to buy something. If you're already invested, like I am, I already own some stuff. I don't have to do anything on a follow through day. I'm just going to look to see if the stuff I own participates and or if there's any new merchandise that I'm interested in. So the thing I liked about today as well was that the stuff that got beat up so hard actually had a pretty good day. So like Palantir was up 8% today. App was up 7%. And I'll go through some of these, but they're not buys in my book. They're just kind of oversold bounces, probably, maybe. But they needed to come back for, to have any kind of chance for the market. So world markets are acting fine. U.S. market, a little bit wobbly. Today is the start, hopefully, of let's see if it can hold. All right. So I think I'm done with the deck. Let me make sure. As far as the stocks that are the screenshots that I had. So let's start with some stocks. So I've done all the ETFs I want to talk about. So I did the junk and the HYG, which I think will be good signals if there's something wrong, like really wrong, versus money just rotating. All right, so like VRT, former leader, below the moving averages. Look, it was up 5% today, which is good. You want to see it to start to participate, but looks tired. And this is the one fly in the ointment on a follow through day, is like, I'm not sure I know where the leadership is in US stocks. I feel like I know where the leadership is overall, but I'm not sure where the leadership is in US stocks. If we get a follow through day, like where's the leadership? It's probably so I think the market needs time, but maybe that you get like a 17th day fall today. That could happen. That's happened before. Here's VST. Relative strength's 94. I bet their 3-month RS is like 24. Let's see here. Yeah, 12. The 6-month is 25. So needs time at best. CEG broken. So these are stocks that are former leaders, in my humble opinion, until proven otherwise. And on a follow through day, I wouldn't go to these. I'd go to stocks that are at or closer to new highs if those existed. Hood, talked about that one. okay, but again, at least it was up today. All right. So the big money was willing to speculate's not the right word, but to put a little bit of risk on, so to speak. Reddit up 5%, broken leader, so needs time at best. AVGO, now it didn't make the biggest move like the other ones did, so it's holding up a little bit better. I mean, I could even manufacture a really poor double bottom here. I don't think I would buy that. I think the way to buy Vago, if you want, is like here. It's like off of this moving average, but not for me. So I just watch it for sentiment, like leadership. How about obviously the other one? So Nvidia, nice day today, up 5%, still below the moving averages. I'm not in any hurry to get into that one, but again, at least it participated. Meta holding up okay. Amazon, yeah, just okay at best, being nice. Google, just okay at best, being nice. Apple, nah. To me, that's a short. I don't want to short in this environment right at this moment, but that to me, that looks like a short. So let's look at the FANG index. Is it FANG A? And this is the triple levered, so it's going to be a little bit funky. Let's look at it, FNGS. So you have a bad break. It was up 3% today. That's good. At least you're getting something. But to me, this is a short. So if we do something like that, I would be looking to short it in this area if it got there. And then I could be wrong. It might go up here. It might dawdle around and then do that. And then who know, anything can happen. So I could be wrong on it. I'm not saying it's a surefire short at that price. I'm just saying I'd be willing to take the risk reward there. Tesla, broken. I think I really, again, for me, if any kind of rally like that, I'm going to put that one on. What are some other leaders like Hims and hers? Just too steep. So very climactic, too steep down time at best. Or the reality is probably new leadership. Palantir, I think, did I talk about Palantir a little bit? It looks a little bit better. Gosh, it's actually almost near the 50-day. So like, yeah, if you force me to buy one of these names, I think I'd buy this one, but I think it needs time. App, I think I already mentioned that one. See how far it is from the 50-day compared to Palantir. So how about Bros? A little bit closer to the 50-day. See, so most of these stocks, they've kind of, they got to get over the damage that has occurred. AEM's holding up really well. It is a gold stock, but broke out of this base. Gold hit 3,000 yesterday or today or the day before. Relative strength 96. I was in this one. I'm not in it. I just have a hard time having conviction in the name. So it opened up 2.5 points or something either yesterday or the day before, and I sold it. I don't know, it's gold stock. I'm having a tough time having conviction. Very good action in this one, RBRK today. Kathy Donnelly mentioned this one on IBD Live. They announced earnings. The loss was so here 65%, but that's absolute terms, right? They lost a lot less. That's what's happening here. But the revenue was big. And you have sponsorship in this name, which is nice. If I go to owners and funds, Federated, Fidelity Contra actually increased their position ever so slightly. Invesco has a position, although it borders on nil. So that's why you have those dash. So interesting name. I actually bought this stock today. And then last but not least, you have the Chinese names. My two favorite are Futu. They announced earnings up 105%. I do own this one. This looks like a really big cup of handle to me. So anything here is pivot wise. And then, my favorite is Baba. It's holding up really, really well. The weekly looks really, really good to me. I'm having a hard time tempering my enthusiasm. I'm so bullish on it. Somebody asked me why I'm so bullish on Chinese stocks. It's just the price action, strictly the price action. The narrative makes me nervous, of course. All of that makes me nervous. But the price action in this stock is a big cap stock. It's hard for me to ignore. So it's my biggest position. It has been. It's really so far, anyways. Knock on wood, helped to make my year. All right, now a lot of people ask, well, what about shorts? Because I know on IB Live, everybody talks about shorts, and to me, a lot of them are thinking of shorting. They're thinking of shorting like too late. You can't short like you buy. Like Rubric, I don't mind buying like that, but if you reverse this chart, I'm not going to short it like that. It's not the same, in my humble opinion, and based on experience for sure. So shorts for me, ACN looks like a potential short. Bad break, I want some kind of rally. That would be a potential short for me. Apollo, all right, bad break. That would be a potential short for me. Not at 134, but at 144. Now I might not get that, but that's okay. I'll just pass. Blackstone, bad break. So that would be a potential short. So these are on my potential short list, but the way I envision it, I can't see me shorting these in the next week or two, 3 weeks, something like that. Tesla, that would be high on my potential short list, but I need a rally. You don't want to short in the hole. I mean, I guess if you shorted it here, you'd have got away with it. But if you shorted it here like that, you probably got stopped on that rally. That's my experience. And if you shorted this really bad break like that, you probably got stopped today. So normally you don't want to short them like that. You want to short them when after they break and then they rally. So those are names on my short watch list. The Argentinian stocks, I bought the bank one, Grupo. I'm not even going to say it. I'll mess it up. GGAL. I like the weekly chart. Looks like it's a couple of weeks tight right there. Getting kind of tired of going down. Volume increases. I just put like a probing position in there. It's not a lot, not a big position. YPF I bought today, and I've tried YPF a couple of times. I think I tried it there or there, maybe I can't remember, but you have an undercut there, and now it's come back. So this looks like an undercut and a comeback for me. I like this name. I like, I think natural gas is going to power all these data centers. Natural gas is the way in the near to intermediate term future. I guess in the long term future, nuclear is the way. But for a trader like me, I think this is the way. It just looks like a good hammer blue candle after a downdraft, and it was a very good stock on the way up. So I feel like it could, make some kind of move back up. If not, I'll get out. It won't be the first time. I think that's it. I can't think of it. C Limited. I think it's okay, but I don't like the fact that it's given back all of the earnings gains. So it's just okay. I do not own this one. I don't hate it, but this is one of the times where where I sell into strength actually paid off. A lot of times they go higher after I do that. I'm looking at my screen here, and I think that should do it. Okay, so let's go to the industry groups. Oil, gas, royalty trust. Interesting. Internet network solutions, internet content, mining, gold, silver, no surprise, leisure, movie, telecom, energy alternative. Banks foreign, they've really made a big move. I haven't owned any of them, but I've kind of seen some of them on my screens. Tobacco, very defensive. Computer software security. 18, not bad. Retail restaurants and so forth. So you know the drill. You know what to do here. Admittedly, I've gotten a little lazy on this drill of reviewing the industry groups every week. Feel like I'm doing it maybe every third week now. And that's because I just haven't been able to get good signals from that in the last 9, 10, 12 months or something. That's just a me problem. I don't know if anyone else is having kind of that same thought process. All right, so let's go to the quote of the week. Tom Hugard, I apologize to Tom if I mess up his name. The book is The Best Loser Wins. I like that book a lot. I've read it twice now, I think. I think this is my second go round. It's an easy read. If you like markets, you like trading, you'll like the book. There's nothing that's going to be like shocking to you that he says, but sometimes it's just nice to hear over and over and over, especially from somebody who has skin in the game. He's a trader. This is what he does. So he says, do you know why I'm so good at trading? I'm exceptionally good at losing. When speculating in financial markets, the best loser wins. One, I assume I am wrong until proven otherwise. So you put on a position. A lot of us dream of where it's going to go to the upside if it's long, I presume. But really, what you want to think about is, what could happen to the downside. So I assume I'm wrong until proven otherwise. I expect to be uncomfortable. I like this one a lot. My best trades this year, like Baba, has been my best trade so far. It's been a very uncomfortable trade, right? What's bothered me? Well, everything. The U.S. market's terrible. That bothers me. Every time I go home with stock, the U.S. market, the way it closed bothers me. China, it's been in a bear market forever. That bothers me, right? You read about the economic doldrums in China, that bothers you. And so there's always something that's going to bother you. I think if Baba works out like I think it's possible, I don't know for sure, but I imagine I'll be selling to people that when it's comfortable to own the stock. So at 180, when everything's rosy and earnings are up 55%, and that's when everybody will say, oh, it's okay to buy China now, and that's when I'll be looking to sell. That doesn't work every time, but there's another saying on Wall Street that's very prescient. Oh my gosh, I had it on the tip of my tongue, now I lost it. The hard trade is the good trade. So like I noticed that with not to pick on anybody of people that watch IB Live, but I do notice in the Q&A sometimes, especially for shorting, how they start asking about short sale candidates when the market's down 9 of 10 days in a row. And you cannot short like that. I mean, you're welcome to try it, but I'll save you the money. You don't want to short like that. It doesn't work. When I say it doesn't work, if you did it 10 times, I am fairly certain you would lose money. Now, each individual situation, you could make money one time. You could short Tesla closing on lows and have it open down 5 points the next day. Sure. But it's just not a good strategy. So it's uncomfortable to be shorting stocks when the market's rallying and you have 8 great stocks that are acting good and you own Palantir and it's up every day. But as that was happening, there were stocks that were rolling over that if you wanted to be short, they were short sale candidates at that time. It was very uncomfortable to be short those. So you want to have a little discomfort when you're trading. You want to have I also think about this in size wise. I think the best size is just a little bit too much. It keeps you on your toes. We're tiniest bit uncomfortable with the stock. If you have too much size, you're not going to be able to handle it right. And if you have too little size, it doesn't move the needle, and you can't make any money if you're right. And sometimes I've found I've let little size positions get away from me to the downside because in my mind it's like, oh, it's a little position. And then 5 days later, I'm like, oh my gosh, I'm down that much in XYZ. So I really think you want to be the tiniest bit uncomfortable. I add when I'm right. That's a given. And I never add when I'm wrong. That's a given. Those are two, set in stone rules. If you never add when you're wrong, it's really, really difficult for you to get hurt. You can get kind of chipped and nicked and knocked around a little bit, but the way people take accounts in half is almost invariably when they add to a loser. So you never add when you're wrong. So Tom Hugard, Best Loser Wins is the book. I would read it if you like trading. Okay, that should do it for today. I think one more week still. So I'll be back next week, 800-831-2525, marketsurge@investors.com. Have a great weekend. Thanks, everyone.